of a flat spot? Is the range causing us to have days where potentially we're not going to see some good trading results? And is there a way in which we can build a filter into our strategy that tells us, right, well, if we get a consecutive, a number of consecutive low range days, then it may be time to turn the strategy off until you see like an increase in range. So that's something that you can play with and objectively measure. So I'm going to do that as a bit of a case study on West Coast crude. Now, you may want to do that on the market you're trading. Very simple process. As I said, you just drop the range into your spreadsheet, and then you're just looking at sorting on all the losing trades, which is very easy. If we go to the losing trades, or all the trades, you can sort on all the losing trades and see exactly what the ranges were for those days. Is there a pattern forming there? Does that all make sense? Obviously, as we know, the bigger the range, the bigger the movement, the more opportunity you've got. The smaller the range, the less opportunity we have, because we're just not getting that 3 times our potential stop. So that's range. Let's have a look now at the potential for what's happening seasonally with our data. So you can see that the range there. We'll also put on our volatility. So we'll insert a strategy, and we're going to insert here so what are we going to do? We're going to we'll insert our volatility. So, and what we'll do is we'll actually grab the volatility indicator. Now you can run the ATR or the true range, and we'll run this, and I'll just copy this, edit, copy, and I'll paste this onto a daily chart so we can see exactly how it's running daily. But while I do that, I'm going to take you back to that. I'm going to take you back to the seasonal charts, and we're going to just have a look at what's happening with crude on a seasonal basis, because I think seasonally that we need to be ready for a potential. Let's have a look at our seasonal charts, and we want volatility on the energies. We need to be ready for a potential drop off in our seasonal chart. So let's have a look at crude oil, and let's have a look at what's happening with crude. Right, guys, does everybody see the seasonal charts on crude? So you'll see that crude at the moment, and we'll just move this over because that's not a very good. Let me just get rid of that and redo that. So I'll do the seasonal chart again. Okay, that should be better. So you can see that seasonally over the last 26 years, crude oil, and I'll just drop this in for those of you who haven't been to this website before. I think most of you have. Seasonally over the last 26 years, this is the volatility on crude. So we're not going to use this as a filter, but we're certainly going to take note of it, aren't we? It's something that we can actually do like we've done with the range filter. We can actually run a long short scenario on crude on our system and see how much of an impact that plays as well. So if I go back into that crude 55 tick afternoon session and put both longs and shorts on, and I match the period that system has been trading against this, I know that, or not the volatility chart but the directional chart, I know the volatility, that the range in February is starting to come off. So we're starting to see a drop in, and it really bottoms out in the middle of March. And you're probably seeing that on those numbers that we saw, in the actual graph. We saw that the range is starting to come off, but you saw massive volatility in January. So we see it every January. Huge volatility in crude. You see a drop off in February, March. Then from March, middle of March, bang, the volatility comes back in. So volatility is another word for looking at range, the amount of movement we have in the market. So if we have a volatility crush or a volatility drop off, what you're seeing that the volatility is coming down, the range is coming down, but what you need to do is measure that against what's actually happening in the market. So this is the seasonal historical chart. So is that being reflected? Is that seasonal volatility range being reflected in the market itself? And we're going to check that now. The other thing I wanted to do before we go any further is I wanted to look at the futures, and I wanted to look at the energies and just the seasonal bias on crude oil. So this gives us a look at the seasonal bias on crude. So the previous chart we were looking at was the volatility. This chart under the futures is the actual seasonal bias. So you can see that seasonally there's not much of a bias between January and February, but from March onwards there's a massive long bias on crude. So again, do we automatically switch to longs from March? No, we don't. We just keep an eye on that to make sure that if our system we're trading is aggressively short or short on a specific strategy. Yeah, good question. Good question, Steph, and I'll come to that. I will tie it all together here in a second. But excellent question. So you definitely don't override it, but you're just cognizant of what's going on because you've got your historical value or your historical biases there, and you're just keeping an eye on that. You're keeping an eye on what potentially could be driving the performance of your strategy. Now, if we go back to the crude chart, you'll see that I'll change this to a daily chart, because remember that when we're looking at data, we've actually got to go back. We don't just want to take for granted that this website is the gospel of what's happening. We actually want to go back and objectively measure, and we do that by bringing up our chart, or our sorry, I should say bringing up, and I'll just move that over. So let me just change that over to. Let me just cancel that out. My apologies there, guys. Okay, so let me just get rid of that. Okay, so I'll just put in there now the trade station. Now we've got a daily chart that's going to come up here in a second. I'll just insert the volatility indicator, and here we go. So we add our volatility indicator, and you'll see that, have a look at the volatility on crude. What do you automatically see on crude oil there with the volatility, that volatility indicator? It's matching our seasonal indicator, isn't it? Remember the seasonal stuff on the seasonal charts, it was telling us that the volatility is coming off. Well, that's being reflected there on the daily chart. So what's happening in real time is matching what's happening on the chart. So that's a good sign. Obviously, that means that they're consistent. Now, the bias. Now let's go back to Steph's question. What overrides what? Does the tracker override this, or does this override the tracker, as the tracker may be performing opposite to the seasonal? So my opinion is that what you do, and we'll bring up the system performance tracker. Okay, who has not seen the system performance tracker yet? Anybody not seen this yet? That's all right. That's all right. So, Nick, you and I will need to get together on the weekend, or tomorrow or Monday, and just go through this. But because this is going to kind of build into the spreadsheet, I'm hoping. But basically, what this is this is your system performance tracker. So you've got your system number, your developer. You're looking at the criteria is if you're testing up a market: liquidity, volume, movement, range. You need all of those things to trade a market. No good if you've got no volatility, range, or liquidity. You need your back testing minimum of 6 months. You've got your stop in there. You've got your largest drawdown. So once you have all your parameters in place, and you've got a system that's running well, like Mark has with his West Coast crude, then the idea is that you need to be tracking each of the. On Mark's, he's trading from 1350 to 1420. So Mark needs to be tracking this every day. So he's putting in his equity high for all trades, and his analysis tells him that basically I'll just quickly bring that up again. Let me just have a quick sneak peek at that one more time, and I'll go back to the system performance tracker. So with Mark's analysis, we know that Mark is shorts only. So you know he's definitely got a bias there to shorts only, and so he's tested, and this is a Mark system performance tracker, but his testing has shown him that longs are out, it's shorts only. So what he now needs to do is continue to track that. Now what he's going to use with his, what do you think he's going to do with his seasonal data? His seasonal data and his volatility. Those two things, remember we've covered two things. We've covered seasonal bias, so longs and shorts, and we've covered volatility. So what would he do? What is he doing with his system performance tracker based on that information? Is he changing his system completely, or is he just monitoring those two things as a clue as to what may be unfolding going forward? Because remember that your system performance tracker is what you're tracking the results of your system in real time. The seasonal bias data and the volatility data, they're just clues as a professional trader that you've got at your fingertips to know when potentially you might need to make a change on your system. So it's like an early warning system, if you want to think about it that way. So think about it as an early warning system, because what I like to do is I like to say, right, well, what's my early warning system telling me about the range? Like, what's the daily range? How's that going along? What's the seasonal volatility? So I might go the seasonal bias up here. So I want to know what that is, and I might even include in here. So I've got the range and I've got my seasonal bias. So if my seasonal bias is longs at the moment, and it's longs for the days I'm watching at the moment and trading, if you can imagine these are days of the week, then I've got a seasonal bias of long, or shorts we'll say, because that's what Mark System's trading, shorts. So I'm basically currently seasonal bias shorts, and then suddenly on Monday, which is on Monday we get a change to, we're getting a long bias now. It hasn't reflected in my system, but that's where the bias is, and I've got to be watching that. So I should be paying particular attention to the long trades to see if they're improving in their performance. Are they improving in their actual trading performance? Are we getting an increase in value on the current value of those trades? So that's what I'll be looking at. Does that make sense? You're basically just using the seasonal bias and the volatility as an early warning system. But what you can also do is you can do what Jim has done, and I'm going to take you through what Jim's done. This is quite impressive. Jim has gone into and I'll let you actually read this, because I'll post this up in the members site tomorrow. But what Jim has done is he's gone into the seasonal charts, and he's had a look at basically the impact of gold during the day. So what he's decided is that, right, well, if I'm going to be looking at potentially trading gold, I want to get a little bit more information on gold. So he's done basically that project of doing a market profile on gold, and he's done a bit of exploring on the seasonal website. And what he's found is that the Dimitri, who's the author of that website, has done an extensive amount of research in putting together a gold theory, or what Jim calls a gold conspiracy theory, where and I'll just read what he's got here, where he's saying that that there seems to be a bit of an intraday move in which the gold markets are manipulated to keep the price is low. And what's happening is that, and you'll see from this chart here, is that in the AM session of the gold trading day, we're seeing that price will typically sell off. So you'll see that there'll be around about between 8 and 10 o'clock there's a sharp sell off in gold, and this is tracked from 93